looking at a situation where there is a certain uncertainty in the world, and there are developments uh, globally. The growth and trade flows, trade growth and GDP growth, both are expected to slow down. And how does it play around? How it is going to have an impact on Indian macro, where the growth is going to be uh, inflation, unlike earlier years when it used to be a surprise on the upside. Now it is surprising us on the downside. Now, whether we look at forecast, quarterly forecast, or monthly forecast, why quarterly by the RBI and the monthly by the market participants or the investors, actual outcome is coming to be the lower than globally. Yeah, commodity prices are at low. Uh, Neither the geopolitical situation hasn't had significant impact on the global commodity prices. And that's a good news for India because we are the net commodity importers. Uh, Now, how does it stack in for India? Uh, when we did our last forecast, and we did it in the month of December 2020, 2024. And since then, both the domestic and global situation has changed. Domestically, what has changed is the monsoon performance has been better than what was expected. So monsoon is progressing well. Uh, your inflation, which we were looking at in December, like when the 4% will reach, and everybody was expecting the 4% inflation will come somewhere around middle of this year, but it has we have achieved 4% much before that. So the inflation has come down. Monetary policy has been very, one can say the liquidity support is there. RBI is rather than VRR is now doing VRR. So the sufficient liquidity in the system. Policy rate has already been cut by 100 basis points. Where do we see how it is going to pan out? So these are few tailwinds which India is having. However, there are headwinds also. So those headwinds are more in the form of what is happening from the global side, the global uncertainty, global GDP growth and trade growth both slowing down from whatever was forecasted. So whether we look at IMF, whether we look at OECD, World Bank forecast, these forecasts are roughly 30 odd basis point, 30 to 40 basis point lower than what has been forecasted by these agencies in the month of January 2025. We are not immune to the global shocks. Yes, our integration to the global economy is marginally less than the what the China and other export dependent economies has. But still, still we have dependence on the global economy, and the good global growth, good trade growth has favorable impact on our both trade, from trade to manufacturing, manufacturing to the GDP. Globally, if your the policy rate or interest rates are stable, capital flows are buoyant, receive a relatively higher trade, not only the trade flows, but the capital flows also. And that has a favorable impact on our currency.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.